Friday the 13th, October 1307. Before dawn, across France, royal soldiers are kicking in doors. They're arresting thousands of Knights Templar in a single coordinated strike. The charges? Heresy, devil worship, blasphemy against Christ. The real crime being the wealthiest financial institution in Europe, while Philip IV of France was drowning in debt. By 1314, the Grand Master Jacques de Molay was burnt at the stake, and the Templar Order, which had invented international banking, pioneered letters of credit, and accumulated the largest real estate portfolio in England, would be completely erased from existence. Not by military defeat, no, by political execution. This is the story of how warrior monks built the medieval world's most sophisticated financial system, created a property empire that dwarfed any competitor, and learned the hardest lesson in finance. No amount of capital can protect you when your biggest debtor controls the army. I'm Arie Van Gemeren, real estate fund manager and host of The Timeless Investor, and today we're diving into one of history's most fascinating tales of wealth, creation, and destruction, the rise and fall of the Knights Templar. Now, many of you might be thinking, Arie, why are we talking about medieval monks? This is a investment channel. We talk about real estate. All right, well, stick with me here because these guys essentially invented modern banking, built Europe's largest real estate empire, and their story contains lessons that are absolutely critical for modern investors to understand and to grasp. And frankly, it's a cool story anyways, and I've always found the era fascinating. So why not? I want to cover it and I love it. And I got feedback from some of you that you wanted me to cover it as well. So here we are. And the story is especially relevant if you're in real estate, especially if you're dealing with leverage, and especially if you think your wealth is protected just because you have good legal representation or because you think the rule of law is stable where you are. So let's set the scene. The year is 1119 AD. Jerusalem has been in Christian hands for less than 20 years after the First Crusade, and pilgrims are flooding into the Holy Land and getting absolutely slaughtered on the roads by bandits. Enter Hugh de Payenne and 8 knights who take monastic vows and dedicate themselves to protecting these pilgrims. They call themselves the poor fellow soldiers of Christ and of the Temple of Solomon, the Knights Templar. And here's a fascinating point. They started with literally nothing but vows of poverty, their swords, and their faith. And within 200 years, they'd become too rich to survive. Okay? Because necessity, as we know, is the mother of invention. And these warrior monks figured out a problem that no one else had yet figured out how to solve. How do you move money safely across thousands of miles in a world brimming with thieves, enemies, battles, you name it? So think about that. Pilgrims are traveling to Jerusalem and they're carrying gold and silver, and it makes them massive targets. So the Templars offer a revolutionary solution. You deposit your money at a Templar commandery in Paris or London. You receive a coded letter and you withdraw the equivalent amount in Jerusalem. Boom. The world's first international banking system, built by monks with swords. This wasn't just a clever solution to a problem, it was transformative for medieval finance, and it made the Templar rich. Very, very rich. Now, of particular interest to me as a real estate fanatic was this. The Knights Templar were not just bankers. They were one of medieval Europe's largest landowners. And when I say large, I mean massive, okay? By the mid-1200s, the Templar Order controlled an estimated 9,000 to 11,000 properties across Europe and the Holy Land. In England alone, they operated the single largest estate in the entire country, bigger than any noble family, bigger than any monastery, bigger than any rival institution. Let me share with you some of the things that they owned. They had agricultural estates generating crops and livestock income. They had urban properties in major trading cities. They had fortified castles serving as secure depositories. They had mills, fisheries, and entire villages under the control. They had markets and fairs that generated fees and taxes. And, interestingly enough, they didn't buy most of it. The Templars built their empire primarily through donations. Nobles joining the Crusades would place their estates in Templar hands during their absence. Kings granted them land and tax exemptions. Wealthy families donated property for spiritual merit. King Henry II granted them land across England. King John gave them the island of Lundy. King Richard I gave them immunity from taxes, meaning every penny of rental income compounded without tax drag. Amazing. Think about the strategy here, my friends. Think about it. The Templars understood something timeless. Financial services, which they provided, need physical infrastructure. Their commanderies were not just military outposts, they were branches of a multinational bank. Each one could accept deposits, issue loans, transfer funds across the network, store valuables in fortified vaults, and generate rental income from the surrounding lands. The real estate wasn't just an asset base, it was an operational infrastructure that made their financial services possible and gave them real world power as well. And the Templars, I want to be clear, were not just passive land collectors. And this is what I love about them. They were ruthless operators. Okay. Timeless principle. Just because you own it doesn't mean it makes you money. You got to operate it well. Take their Lincolnshire estates. They ran a specialized commercial wool production system where different preceptories served different functions. Eagle served as a breeding station. Templehurst focused on crop production with an emphasis on sheep farming. They purchased expensive medicines like mercury and verdigris to treat livestock diseases. Their estates included halls, chapels, kitchens, brewhouses, bakehouses, dairies, granaries, and forges. They owned water mills for grinding grain. They controlled salmon fisheries. They established new towns from scratch, like Baldock in Hertfordshire. Somebody is going to correct me on my pronunciation. I don't know. I have an issue with the British pronunciations. It's tough. Baldock and Hertfordshire, which served as their English headquarters. In Wetherby, Yorkshire, they obtained royal grants to move markets and fairs to their properties, even changing market days to maximize traffic. Big data analysis before it existed, guys. I mean, it's so awesome. There is nothing new under the sun. That's why this stuff is so fascinating. By 1308, this small town had become a profitable trading center, generating income from marketplace stallage, manorial court fees, mills, and fisheries. This wasn't just land banking. They were literally building cash flowing business ecosystems because the Templar understood the core value of long term real estate ownership and infrastructure investment. Control the infrastructure, create demand, optimize operations, and let the tax advantages compound. That's a foursome right there made in heaven, literally. And because they answered only to the Pope and were exempt from local taxes, every penny of rental income, every loan payment, every deposit fee, it all compounded with no drag. Now, here's the thing. Eventually, you get into the lending business, all right? And the Templar, they didn't just move money and collect rents. They had access to money. They were a bank, right? They were taking in deposits. What do you do with that money? You lend it. And they started lending aggressively. They financed the Crusades themselves. Think about that. Warrior monks lending money to fight their own holy war. Brilliant. They financed European monarchs funding wars. They merchants funding trade expeditions, nobles covering ransoms. But here's where things get dicey. It's always dicey. If there's a truism across history, you don't lend to dictators and kings. It's a bad idea. Like bankers, past and present, they lent to kings. And Philip IV of France wasn't the first monarch to borrow from the Templars, but he borrowed a lot. Wars are very expensive, and Philip's wars against England and Flanders had drained the French treasury. So by the early 1300s, the King of France owed the Templars a fortune. So here's the problem, other than the army. What happens when your debtor controls the entire legal system and runs everything? It's tough. It's the short answer. The Templars had built an extraordinary empire. They had sophisticated financial services, the largest real estate portfolio in England, diversified commercial operations across Europe, a military force for security, and papal protection. But they had made one catastrophic error. They became too concentrated in debtors who could destroy them. Maybe they had faith that the debtors wouldn't take action against them. Maybe they trusted in Christian charity. I don't know, but they made a mistake. And when your largest borrowers are also the most powerful people in Europe, Your risk isn't just financial, it is literally existential. Philip IV owed a lot of money. He owed so much that repayment would cripple his kingdom. So he did what powerful debtors throughout history have done when they can't pay. He changed the rules. In 1307, Philip coordinated with Pope Clement V, who he had essentially installed, to arrest every Templar in France on charges of heresy. The accusations were absurd: spitting on the cross, worshiping a demon cat named Baphomet, obscene rituals. But the trials, as you can imagine, were not about the truth. They were about seizing assets. Within weeks, the Templars' French properties were confiscated. Their leaders were imprisoned and tortured. Their financial records were seized. Their lending operations were shut down. Other European monarchs sensed an opportunity, as they do, and followed suit. Edward II of England arrested Templars and confiscated their properties. The dominoes fell. By 1312, Pope Clement V officially dissolved the order. Jacques de Molay, the last Grand Master, was burned at the stake in 1314, allegedly cursing both the Pope and the King as he died. But I love this. Both of those men, the King of France and the Pope, were dead within a year. History does love a dramatic ending. How does that sound for divine retribution? We'll have to debate it forever. What really happened? But they both died, as they deserved, I would say. Philip seized all their assets: the buildings, the livestock, the mills, the land, everything. And then something incredible happened. It all fell apart. The royal keepers appointed to manage the former Templar estates did what bureaucrats do. They tried to maximize short-term cash extraction. Remember, the Templars were investing in their land. They were caring for it. They had a symbiotic relationship with their holdings and their estates. They were good stewards of capital. These bureaucrats were not. Within years, mills that had been profitable became derelict. Properties in Southwark fell into such disrepair, their upkeep cost more than their value. The sophisticated wool production systems collapsed. Livestock breeding programs were abandoned. Only 12.3% of harvest was distributed to workers, down from Templar era levels. The Templar had been long-term stewards who invested in soil quality, livestock breeding, infrastructure maintenance, and worker welfare. They built operational systems over decades: crop rotation schedules, breeding strategies, maintenance protocols, skilled worker relationships. The royal keepers were short-term extractors with no institutional knowledge and the wrong incentives. They inherited buildings and animals, but they didn't inherit the expertise to actually run these properties. The assets remained, the value disappeared, evaporated, you might say. Within a generation, what had been England's largest and most productive estate was a collection of deteriorating properties operated by people who didn't understand the value of what they owned. And I love this part of the tale because it teaches a timeless truth. And we're all about timeless truths here on the Timeless Investor. Just owning the asset is not enough. You have to be a damn good operator at the same time. Philip got the deeds. He didn't get the wealth creation engine because he and his fellows didn't understand how to run the operations. Now, that is a real estate tale, my friends, as old as time. So what are the lessons here that we can take away as timeless modern investors? Because this could absolutely happen today. Lesson 1, counterparty risk is everything. The Templars' biggest debtors were also their biggest existential threat. When you lend to someone who controls the courts, the armies, the legal system, you are not in a business relationship. You are in a hostage situation. Modern parallel. Be very careful about who you are dependent on. Whether it's a tenant who represents 60% of your building's income, a partner who controls the operating agreement, or a lender with onerous default terms, concentration of power is concentration of risk. I would also just speculate, lending money to a government is fundamentally not great business, right? They can change the rules. They can they can monetize the debt. You think your money in a treasury bill is safe, and it is safe. The raw value of it might be safe, right? But what happens between the year 1 and year 10 of your 10-year treasury bill if the US government decides to monetize the heck out of the debt and the value of the dollar deteriorates? You still got $100 back at the end of the day, but is your $100 still $100? It's not. Think about that, right? Lesson 2, operational expertise is inseparable from asset value. The Templars had built sophisticated systems over decades. Remove the operators, and you're left with depreciating buildings. Philip learned this the hard way. The modern parallel, in my opinion, is owner operators outperform hired management in real estate for a reason. Family offices beat institutional capital, in my opinion, over long periods. Local expertise often wins out against out of state money. The asset is inseparable from the expertise required to run it. Lesson three: political protection is never permanent. The Templars had papal immunity for over 200 years until they didn't. Rules change, regimes change. The protection you have today can evaporate tomorrow if someone powerful enough wants it gone. Modern parallel: never build your entire strategy around a single regulatory advantage, tax incentive, or political relationship. Zoning protections change, tax laws change, political winds shift. If I dug hard enough, and maybe I will, I guarantee you I can find modern day examples of people that bet a lot on a political relationship and it didn't pan out. Lesson four: real assets matter, but only if you control the enforcement mechanism. The Templars owned 9,000 plus properties. It didn't matter. When the King of France decided those properties were his, there was no court to appeal to. Modern parallel: property rights are only as strong as the legal system that enforces them. Invest in jurisdictions with rule of law, stable governments, and respect for contracts. This is a primary reason why the United States remains a target investment destination for many, many foreigners that want to invest in real estate here. Yes, I know. There's a lot of political stuff going on in the States, but we are still a beacon for security, rule of law, and safety of assets. I can't tell you how many calls I fielded from major family offices in South America who are desperate to move money to the United States. Why? Because they have communist regimes on the doorstep of taking over. Venezuelan families desperate to get their money out. Colombian families very concerned. This is a real thing worldwide, and people come here for a reason. Lesson five: when you become too big to fail, you also become too big to tolerate. The Templar were so rich and powerful they made kings nervous. And when institutions make sovereigns nervous, bad things happen. Modern parallel: there is a sweet spot in wealth and power, big enough to matter, small enough not to be a threat. Once you're large enough the governments see you as a rival to state authority, you're in dangerous territory. Just ask Jack Ma. The bottom line: the Knights Templar invented international banking. They built Europe's largest real estate empire. They understood cash flow, tax optimization, operational excellence, and infrastructure control centuries before modern financial theory came about. And they lost everything in a single coordinated political strike. Not because they were bad investors. Far from it. They were fantastic investors and excellent stewards and operators of their estates. It's because their biggest debtor had an army. That's the game, everyone. That's the game. Capital is power until someone with more violence decides it isn't. The Templars understood wealth. They understood systems. They understood compounding. They just forgot the most important rule. In the end, property rights are only as strong as the people with the guns say they are. So, what is the takeaway for us as modern investors? First, diversify your counterparty risk. Second, become an exceptional operator, not just an owner. Think like a Templar steward of your land. Third, never assume political protections are permanent. Fourth, invest in jurisdictions with strong rule of law. The United States is a pretty good bet. And fifth, stay under the radar when possible. Don't become too big. The Templar story is not just ancient wisdom, as nothing is on this show. It's a warning about what happens when wealth accumulation ignores political reality and gets its head chopped off for it, or more accurately, gets burnt at the stake for it. Sorry. Thanks for watching. This is Arie Van Gemeren with The Timeless Investor, reminding you that lessons of history are more relevant than ever. If you found this valuable, hit subscribe, leave a comment, share it with a friend who needs to hear this story. And remember, in investing as in life, the timeless principles endure. Think well, act wisely, build something timeless. Thanks for being here.